Tesla slashing prices on its whole EV lineup for the third time in the U.S. this year as it looks to counteract rising interest rates, with the EV maker making the biggest cuts on its slower selling, more expensive S, that large sedan, and of course the X, big SUV there. Now, of course, what has come to light or come to the market recently is the production synergies that they do have between the Model 3 and the Model Y. The mass market Model 3, of course, that's gotten so much of the fanfare and so much of the purchase orders that have come through for Tesla. When you think about the 3 and the Y, that is essentially the lion's share, the majority of the number of productions and produced vehicles and deliveries that the company is making now. So where are those profit margins continuing to come in from? Well, that's what the company has tried to continue to be more vocal about, saying that they're not seeing this hit margins as much as some of the other automakers would if they were to go wholeheartedly into this pricing war as well. And we were able to speak last week about more of some of that pricing strategy that is set to come through, especially at Ford too. Their CFO joined us and essentially talked about their own confidence in being able to maintain prices or at least be competitive within this pricing environment as well.
Right. I mean, it's interesting that this announcement is taking the stock down by so much, because most of the analyst commentary I've seen have said it was expected. Maybe not the timing, maybe not the magnitude of the pricing cut, according to those like Tony Sacconaghi over at Bernstein. But nonetheless, I mean, to see it down almost 4% is interesting here. And to your point, this balance, this dance between margins and volume, it does seem obviously that Tesla is prioritizing volume and getting the delivery numbers if they want to meet their forecast, that they got to sell more cars is the bottom line. And this is the way they've seen to do it. At the same time, Tesla's making that announcement of the new Megapack battery factory near Shanghai, which is also interesting because Tesla's sort of continuing its trend of being sort of geopolitical agnostic, if you will, at a time when we are seeing China conduct military exercises following the visit of Kevin McCarthy with the president of Taiwan. And so Tesla then making this announcement. It's just interesting timing that it is happening right now, although I guess you can pick any time over the past couple of months. It would have been a time of tension between the U.S. and China.
Well, still, one of the most cited unknowns or headwinds that many CEOs and Tesla, of course, has to acknowledge what that headwind has looked like. And they have, even in their most recent earnings call, as we were listening in on after the call, in their most recent kind of press conference that had questions from both retail investors as well as institutional investors, what Elon Musk saw as one of the biggest headwinds. And he did cite kind of this force majeure type of event, which is typically seen as kind of like an act of God type of event that would be happening. And the geopolitical tensions cited within that. And so that being one thing, but I think, even within how they're going to be going about moving this forward, they're going to break ground on the plant. That's going to start in the third quarter. Production, that's set to commence in the second quarter of 2024. So those are some of the timelines to continue looking at.
Yeah, and speaks to Tesla's ambitions beyond vehicles, right? That this is a product that's designed more for the grid than it is for cars.
Yeah.